true inflation is monetary expansion. And they don't want to tell you, hey, every 9 to 10 years, you're losing half your purchasing power and at current M2 growth. Because if you said that, there'd be riots in the streets. And so they kind of have to pitch this idea that it's 2% inflation target, things are stable. But yeah, in finance, they literally are assuming that this is a reliable tool. But proof of that is look at any company 25 years ago. Like they literally all appear as small caps. So how do you know what their actual financial stance was or position when you can't actually compare a company today to a company 25 years ago because the dollar is so unstable?
Bitcoin is a currency on the internet.
If you don't trust any other currency, this is where you go.
It's going to outperform everything.
Bitcoin could eventually be worthless.
Every day is a good day to buy Bitcoin.
Bitcoin reached its highest price to date.
Bitcoin hitting a new high. It really has reached escape velocity.
There is no second best.
Who cares about Bitcoin?
It's the only secure database that's ever been invented.
Antisocial.
Bitcoin is the real deal.
Stupid.
Everything is bullish for Bitcoin.
Immoral.
It's going up forever, Laura.
Fix the money, fix the world.
WhiteOak is a registered investment advisor, and the opinions expressed on the show are their own and do not reflect the opinions of Basilica LLC. Joining us as a CPA, and the opinions expressed on the show are their own and do not reflect the opinions of Trusted CPA or other affiliated firms. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and unless otherwise stated are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as a recommendation appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Any statements or opinions are subject to change without notice. Vista Investment Partners 2, LLC, DBA, Vista Investment Partners, Vista, a federally registered investment advisor under the Investment Advisors Act of 1940. Registration as an investment advisor does not imply a certain level of skill or training. The oral and written communications of an advisor provide you with the information about which you determine to hire, retain an advisor. Vista's Form ADV Part 2A and 2B can be obtained by visiting advisorinfo.sec.gov and searching our firm name. Neither the information nor any opinion expressed is to be constructed as solicitation to buy or sell security or personalized investment, tax, or legal advice.
Welcome to Bitcoin for Financial Services Media, the podcast where sound money meets professional services. We explore how to build the financial services industry within the principles, values, and ethos of Bitcoin. Today, we're joined by Jonathan Camps, CPA at Orange Horizon Wealth. Let's get started.
Alrighty, welcome back to another episode of the Bitcoin for Financial Services podcast. And man, today we've got a treat like we do every week. This week is kind of stacked. We've got several shows to kind of, because I'm out of town next week and the time zones will be a little too crazy. But today we've got Jonathan Camps, who's a CPA. He's at Vista, or is that right? Vista Investment Partners?
Yeah, Vista Investment Partners. Yeah. And we're DBA's Orange Horizon Wealth, which most people might have heard of by now. Yeah.
Yeah. Well, welcome to the show. We've got some deep content to go through. You've put out some really great articles over the course of the past 4 or 5 months, and I know we met out at our summit in Denver. So glad to be on the pod with you. And we're neighbors, basically, right? You're right up the
next
road,
door.
Yeah, I love it. Just a quick 2-hour, hop and jump away. So, well, thanks for coming on, man. How's your week going?
Oh, it's going great. Working in business, Bitcoin. Bitcoin's good for business, so it's always a good time. Yeah.
Always a good time.
You guys are on the investment side and tax, or tell us a little bit more about just give everyone the quick down low on what Vista does in Orange Horizon.
We're a registered RIA that basically embraced Bitcoin a few years ago, and we went through a big process of building up a compliance team to where we can offer Bitcoin to clients and speak on it, because we are strong believers that this is potentially the greatest innovation of our lifetime. Even though a lot of people are focused on AI and other investments, we view Bitcoin as a game changer. I myself came from the corporate accounting world and got orange pilled, and through my process, I joined Vista Investment Partners a couple years ago now, and we're starting up a tax practice actually this year. So we will be offering tax services, advisory, and prep for our regular traditional RIA clients, as well as Bitcoiners that want CPA and tax advisory from a, orange-pilled individual who sees the asset that they hold the same way and can give good guidance on what to do with that. So yeah, we're regular RIA who got orange-pilled. Our managing partners are all orange-pilled, and we now are doing tax preparation and advisory services as well.
Wow. So you're going to put me and Wyatt out of business.
One-stop shop.
Why do we have this guy in the pod? Yeah.
We're merging. Hey, Bitcoin is good for business. It rises all boats. There's enough Bitcoiners out there that we'll be okay.
No, dude, absolutely. I love to hear that. I mean, we are I would say in some ways like kind of drowning over here. There's not enough practitioners on the tax side that are going down this route, and man, it is potent. I'm sure you guys have all seen it. Like we have this like give and take where the government is like, they're only going to continue to like really try to squeeze people on the tax side. And then people are seeing the headlines and they're like, I don't know why I'm sending money to Washington, D.C. So I want to make sure I'm working with people who can help me in all the legal avenues, minimize that bill in the short and long term. So I love to hear that. Congratulations to you guys.
Thanks. Yeah, we're really excited. Honestly, it's been a great couple years embracing and getting through that hurdle. But yeah, it's been really good for us. And I know you guys too, with the space and everything you're doing in the podcast. There's enough people out there that will embrace Bitcoin if they hear about it and understand what the problem is, that I don't think it's a problem. There's not too many tax advisors. Well, tax advisors maybe, but in the Bitcoin space, like there's enough people there. Yeah.
No, certainly. And that's our whole mission is, get more folks, on board, providing these services, and ultimately offering clients a better experience. Jonathan, you guys kind of made a splash on, Bitcoin Twitter. So just while you're, introducing Vista and Orange Horizons here, you guys recently, opened up a office in Rockford, which is sweet. Why don't you kind of walk us through what that process was like? And I was particularly surprised by, the reception of the locals. And I think this is kind of maybe a glimpse into the future of, more, orange carpets getting rolled out for Bitcoin companies. And it was awesome to see, your guys' success and reception there. So love the inside scoop.
Yeah. So it started several years ago. We were introduced to Jeff Arand through Swan, Ryan Flynn specifically. And he was basically saying like, hey, you guys might have a lot in common. You guys should talk. So Jeff was from the traditional brick and mortar RIA, where you're not allowed to talk about Bitcoin. You're not allowed to recommend it. Even if someone wants to buy it, you're kind of like, I can't help you. You have to go do it on yourself. And so from his perspective, he was doing a disservice to his clients. And so that started a conversation with us, who just launched Orange Horizon Wealth. And over several years, he was able to transition from his old RIA firm to join Orange Horizon Wealth under our umbrella because we were independent. And in that process, he ended up opening up his own branch out of Rockford, Illinois. So he's not coming, in our building. He's doing his own thing, but he's under our umbrella, so he can offer Bitcoin and give advice that he feels is his fiduciary responsibility to his clients. And in that process, he had a ribbon cutting, and the mayor of Rockford shows up. The news station shows up. The best part is across the hall, and I mean like 50 feet away, is a brick and mortar RIA inside the same building. And they're all like peeking and looking over because there was probably a crowd of 50 people that showed up. And the Chamber of Commerce from Rockford was there. And they said that this was the biggest ribbon cutting they've had in a long time. So there's a lot of interest in Bitcoin. Sparks interest, whether or not it's good or bad. People, when they hear the word, they have curiosity of what's going on. And the best part is there was a couple clients walking into the other brick and mortar, and they were looking and they were like, I kind of want to see what's going on over here. And then they end up sending some people to kind of like interrogate what was going on and who we were. And are we crypto? Are we Bitcoin? And then they do the typical, I heard about Bitcoin in 2012 and then I sold it at a 20% gain. And it almost like you're trying to show that I know what this asset is, but it shows that they don't truly understand what the asset is. But yeah, it was really great. The Twitter response was great. I saw over 100,000 views on some channels, which shows it was the thing of the day, I guess. But yeah, congrats to Jeff on making the move. Congrats to my team for getting it done. And we're excited. And we're waiting for more. Like, we're trying to get more. So we're recruiting, we're like, hey, you want to offer actual Bitcoin, not the ETFs? We can. So it's kind of cool.
I love it.
Your wealth deserves intention. Basilic Financial is a Bitcoin-focused wealth management firm built to help our clients find balance between money and meaning. We integrate sound money strategies across 4 distinct personalized services: financial planning, individual wealth management, retirement services for SMBs, and Bitcoin financial services. Your prosperity, your purpose, intentionally guided at Basilic Financial. Visit our website at basilic.io to schedule a free consultation.
Well, I want to talk through the article that you put out earlier this year. I mean, I remember it got, I don't know how maybe you sent it or I saw it on LinkedIn and then I dropped it in the Signal group for Bitcoin for Financial Services. I mean, I think that we could kind of live here for a little bit and just kind of talk through the core thesis. I guess maybe to take a step back, because I think it is helpful for people to understand like why it is that you went down this path. In the article, you're talking about COVID, which I hear that a lot, right, from Bitcoiners, especially in that 2020 class, of saying it didn't really click for me until COVID and the things I saw that happened with the interest rates going to zero and then, the Canadian trucker protests and all kinds of things where you're like, if you're caught on the wrong side of the big government, you might want to think through what that looks like from a financial standpoint. So I guess maybe let's go there first. Let's just talk through anything you want to bring up from what you were seeing back then, from macro data and the client work that you're working on that kind of made you like the light bulb moment of like, wait, what's going on here? And how do I approach things going forward?
Yeah. So this goes back, high school days where Warren Buffett was like the legend to me. I just admired him and his work ethic and how he would approach investing. And so I went to college and I got an accounting and business and finance majors. And so that initially started my journey to be a value investor. So I read all the books, Security Analyst, and not just read them. I wrote summaries and then summary of the summary, because the book's like 900 pages long if you read it, and it's just really dense. And so I would try to break it down because I saw what he was doing, and I kind of inspired to be able to assess a company, understand the operations, and then invest and make a lot of money. That was the long-term goal. And so what led me down this road is after, working in corporate accounting for a decade, value investing for about 8 years, and doing deep research into companies and assessing and doing discount cash flow analysis and looking at all these metrics, there's one thing that occurred to me, and that was we were taught accounting, but we were not taught about the money we were accounting for. And I never really questioned the unit that we were measuring. And so when you're assessing a company and you're looking at these, oh, hey, they're growing at 8% a year, and you're forecasting and then doing a DCF on what you think those operations will be, and you're using all those metrics, you're using nominal terms, which might be growing more than the actual nominal, but you don't realize that because in a financial statement, they're numbers. They're not discounting or using a net present value of what that is in real terms compared to other things. You're using the dollar as if it's stable. And so that was kind of what COVID happened and all the, the craziness with that real estate jumping up 30 to 50% everywhere. You had the entire new car industry shut down, and all those prices were going up 30, 40, 50%, because I was in the used car corporate world for a while. So I was watching what was happening, and we were all like a little confused. And then it got to companies I was value investing in. I was assessing them, and they're coming up at 7 or 8 PE ratios, meaning they lost like 60 to 70% of their market cap within a month. And that kind of was the light bulb moment of like, I should be rejoicing right now because these look like the greatest buys ever, but something is off, because you had other companies, I won't say their names, but they were at 1,000+ PE ratios. And I'm like, this makes literally no sense. It doesn't even matter if, they 100x. Like, if you're buying 1,000 PE ratio company from a value investor's perspective, right? I'm not talking a price appreciation, but from a deep value, you just wouldn't ever touch it. But then it goes up more and more. And then you had meme coins, meme stocks. And so that kind of had to reassess what I thought I knew about money and the markets. And then that's kind of what led me down videos looking up Andrea Antonopoulos. And then he kind of opened my eyes to reading about the Bitcoin standard. And then I basically read every book you can find on money and Bitcoin. I read Jekyll Island. You read Seventh Property, you understand how Bitcoin actually works. And that's kind of what started my transition of changing my measurement tool of how valuable or healthy is this company. So the long story short is basically you're doing things for 10 years and then you see the red pill and the blue pill. You take the red pill and then you realize everything you thought you knew about finance was actually not taught. You're kind of assuming the reference you're using is reliable. And if you question that, it makes you question everything.
Yeah, no, I mean, I think probably Wyatt and I definitely have seen that. And I mean, I've seen it more like in small business world, right? It's like, okay, you're depreciating an asset, and then maybe you're trying to also set money aside to replace that asset, or at least like account for that within strategic meetings to say like, okay, like I used to work with a big, coffee roaster, and they'd spend, $100,000 on one of these big roasters.
Yeah.
And you're trying to measure that, right? Of like, okay, well then this will only last us a decade or a decade and a half at the most. And then we're going to have to go figure out how we're going to actually replace that asset. And if the ground is like moving and sliding beneath your feet, right? Like, how do you plan for that as a business owner? And the answer, I think, is extremely difficult. And that's probably why you see so many small businesses, whether they know the reason or not, that's why they go under. It's just because they can't plan for this uncertain future that they're having to live through.
Yeah, I mean, if you worked in that world too, I'm presenting financial statements and operation performance, and you're looking at measurements of like, hey, we're growing 5, 6, 7, 8%. And you think that's great year over year. You're like, hey, we're really growing here. But then you're not able to acquire future inventory. Things aren't adding up. You're like, well, we're growing. Our profits should be able to acquire more goods and services to continue that business. And to your point, eventually, if you're measuring wrong, like you'll hit that point to where your prices now have to go up, or your quality is going down, or you're just shutting down entirely because you get underwater in debt that you thought you could service, but you're not able to acquire the future goods. And that's kind of what stood out to me why I wanted to write this article is business after business I'm helping. And on paper, they look great. But the reality of what's going on in the world is worse than what's happening on their balance sheet. And so eventually, something's going to have to give. And it sucks because we should be able to run a business and store in something that is stable enough to plan long-term. But instead, now we're making short-term decisions, or we're making malinvestments because we thought it looked good. And then to your point, the ground moved under our feet and now we're underwater.
Yeah, it's really well said, Jonathan. I think it's such an important point, and it's honestly one of the biggest tools I use to orange pill people is trying to help them understand. It's like, look, you're not using a consistent measuring stick here. I kind of think of it as if money is the base market and every other market is built on top of that, and the value of that market is constantly manipulating and shifting. It's like you're building a house on sand, and it's like you're doomed to fail. And it's unfortunate, and just obviously nothing you can do about it besides opt out, and go on Bitcoin standard and use a more solid unit of account.
Yeah, because you don't know if you're measuring the table or the ruler. That's kind of my main point. Like, what are you measuring here? You measuring operation improvement and growth, or are you measuring monetary debasement?
Yeah. Well, you made a point in that last piece right there where you just said measuring us in a more stable unit, right? I think for someone coming in off the street and they click on this video and they're like, oh, these guys are talking about Bitcoin, interesting. And they hear into a more stable unit and they, and they exist in the year 2026 and they watch CNBC maybe on the TV while they're working. And they're like, well, I don't get that. That doesn't compute in my brain. Can you kind of, can you go down that path of why you would argue that Bitcoin is a stable unit when measured correctly?
Yeah. Well, measuring in fiat terms, it may appear very volatile. Although we know that the dollar is extremely volatile. Interest rates, they alter, they print more or destroy through paying off debt. And their measuring stick is moving, but when that is your unit of account, then it appears stable. But in reality, the prices of everything are changing. Bitcoin, from that perspective, or you can use gold or Bitcoin, the price may be changing, but the quantity of that item is, in Bitcoin terms, fixed. So we know that there's only 21 million, or really 20 million.9999, whatever, but basically 21 million of those units ever. So you can basically approach long-term decisions on how much of this network or percent of this monetary unit or good am I growing. So if you're accumulating more Bitcoin in Bitcoin terms every year, you can actually assess whether or not you are achieving profit. If that's your capital, your unit of account that you're using, the capital good, then you know if you're increasing that unit. So stable in the sense of the denominator you are measuring everything in is not changing. Now, in fiat terms, it may change, but I think because we have been the dollar reserve currency of the world, we assume that the dollar is stable or fixed, when in reality, nothing is stable or fixed unless it's controlled. It's not a free market when you're altering all of the underlying properties of that money. That just basically means that we are either diluting or we are manipulating those figures to have an illusion of growth or stability when you could feel it today. I mean, things are growing at 10-20% a year. So is pricing of everything in dollars is also not stable. And so people just assume because you have $1, hey, this is stable, it's $1, but that dollar is getting you less and less goods every year. So it's not stable in the sense of what you're acquiring in goods. It's only stable in nominal terms.
Yeah, and I do want to dig into kind of some of the equity analysis you did behind that in the article. But one of the things I want to double click on, you mentioned, I think the finance industry is notorious for making these assumptions because, also finance major. And this never really clicked for me until I was a Bitcoiner. But, in corporate finance, it was like, well, your WACC, your weighted average cost of capital, risk-free rate, 2%. It's just blindly 2%. And every financial model ever, it was like, where's this number even come from? Don't challenge it. Don't bother, tweaking it because that's what everybody uses.
Yeah, and then that's if you're using a 2%. But once again, that's based on CPI. And from a Bitcoin's perspective, when you've done the work, you realize CPI is not inflation. It's literally just a proxy in the basket that they use to measure prices constantly changing. And majority of the goods in the basket or substitute goods already. So they'll go from ribeye to ground beef, or they'll have like VHS tapes in there, which clearly nobody has, or just whatever they use to make that number appear better, because in true inflation is monetary expansion. And they don't want to tell you, hey, every 9 to 10 years, you're losing half your purchasing power and at current M2 growth. Because if you said that, there'd be riots in the streets. And so they kind of have to pitch this idea that it's 2% inflation target, things are stable. But yeah, in finance, they literally are assuming that this is a reliable tool. But proof of that is look at any company 25 years ago. Like, they literally all appear as small caps. So how do you know what their actual financial stance was or in position when you can't actually compare a company today to a company 25 years ago because the dollar is so unstable? So that'd be my answer to the stability of the dollar, I guess. Just look 20 years down the road, or your grandparents were making what, $2, $3 an hour. And those terms would be able to acquire, let's say, 10 cheeseburgers. I can't work, that much time to acquire the same amount of goods. So it's all about that measuring stick of what you're using.
Yeah. Price of Bitcoin is 1 Bitcoin. And my co-host is on a VHS standard. So if we could maybe keep the VHS slander to a minimum, that'd be appreciated.
Only because all the new movies are, I don't know what the right PC word is, but we just prefer, the old school Disney
classic
films
Lion
household,
King.
I guess.
Yep. I'm on it.
And they can't change it. I don't know if you guys have seen that on Disney Plus. They might adjust, some things, or they might put some So yeah, I might be a VHS maxi. So, but I'm a Bitcoiner and an AI guy. So I'm playing in both worlds. If you're a financial professional working with Bitcoin, you know the pain of messy CSVs, broken cost basis, and accounting tools that were never built for this asset. Bitmint fixes that. Bitmint is the Bitcoin native accounting platform built for CPAs, bookkeepers, advisors, miners, and serious Bitcoin investors. You get clean Bitcoin bank statements, reliable cost basis tracking, full reporting, and fiat integration through Plaid. No crypto talk, no workarounds, just proper accounting for the hardest money on earth. Create a free account or book a demo at bitmint.co today. The one thing I want to bring up on this front is, I don't know if you guys have heard of this guy named Dr. John Doerl. Does that name ring a bell to either of you? He's a professor down at University of Tampa. If you haven't interacted with any of his stuff, or anyone listening, he's a great resource. I don't know if he has a ton of content. I've only seen him speak in person when I've been down in Florida at a few events, but he has this great, he's very good at like these visual analogies. So one that I've seen him do a couple times now is he'll hold up an ounce of gold, right? And he will be like, does anyone know what this, was worth when we went off the gold standard in 1971 or whatever? And he'll wait, he'll be like, no, seriously, does anyone know what this is worth? And I always forget, but I think he says like $35 an ounce, right? And then he's like, now this is worth, whatever it is today, right? 4,800 or 5,000 or whatever it is today. I don't follow it too closely.
5,100, give or take.
5,100. So he makes that, and it's a very powerful illustration to say like this little, circle, it looks like a quarter. He's just like, this didn't change. The measuring stick changed, right? And this didn't get more valuable, really. The thing that the units that you're applying against it got way less valuable. So that's one. And then the other it might be more powerful actually, but it's just different, is he'll take a dollar, like a dollar bill or a $20 bill, and he'll just start ripping little pieces off of it, and he throws it into, off of the stage. And the illustration is like, this is what is happening actually to your dollar every year when they debase you 7 to 8% a year. So anyways, I think it's, I just love that he's a very visual guy and does things that are like, wait, this guy's ripping up a dollar. Isn't that illegal? But I get it. That's crazy. So anyways, if you haven't looked into his stuff, he's very, just a good guy to follow. So not really a question there. I just wanted to throw that out there.
Yeah. Something I want to build on there too, Jordan, because, I think specifically in our advisor role, I use kind of a similar example when I'm sitting down with my financial planning clients. We use a bottle of Coke, and it's like, okay, if you're 40 and we're projecting out, 50 years until, end of plan at age 90, it's like one, conceptualizing growth of assets, which can be difficult, and obviously forecasting more of an art than a science, but then also understanding the growth of expenses. Like everybody gets excited about their portfolio growing, they really kind of ignore like the expense side of their lives growing. And so we really use this as an exercise to like ground us in like how much can change over a relatively short amount of time, a generation or two, certainly over the course of your living life and what you need to plan for. And they're always like shocked, and it's just kind of like this, like kind of like this shock factor we use. It was like, okay, whoa, it's like we really need to be planning over long-term horizons. And it's just day by day, and you're just constantly getting chipped away at a little bit and a little bit. You don't really notice, but if you zoom out and actually look at the trend, it's like it's shocking. And it's like, well, we need to comprehend this. And I'm sure you guys talk about that stuff all the time, Joffin.
Yeah, I have an illustration I use with high school kids or college kids that ask, like about money, or if we have an intern, I'll take a bag of sand and poke holes in it, and I'll have, a bunch of sand in a scooper. And so while you're bleeding out, you have to pour more money in. I'm explaining like this is what your income is doing with your actual purchasing power. You have to constantly refill it, otherwise you're going to bleed out over time. And then you obviously have the steel jar, the stable reference of putting that in. And the difference of, in nominal terms, those will be different because they may price this steel jar differently than the units in here. But I know this is of the unit itself will not dilute. And so as long as the market grows to value this item more than whatever is bleeding out, then you're going to be winning in real terms. I kind of use that for my kids and other interns. But yeah, I mean, illustrations are very powerful because we can talk numbers, but if you don't see it, it kind of doesn't resonate with you until you're feeling it. And I feel like most people are feeling it now, and that's kind of why they'll go off on more risk on assets. So we can kind of see the markets waking up.
Yeah, it's interesting, John. So in terms of the market, why don't you kind of dig into some of the work and research you did for the article, and how really inflation or monetary expansion is really kind of fueling equity growth, and how you guys talk to clients.
So this is where my passion went into. I started wanting to assess historical data of assets because being an investor and a value investor, and assuming inflation rates or asset price increase, we always hear that, real estate's a great investment, or you always hear the S&P will always go up, and it averages 10, whatever, say, percent a year. But it really goes based on what time frame. Because if you're going based on like 100-year investment, typically investments match M2, like to the T. It's almost like the same number, but over periods of time, they'll fluctuate. And so I started assessing companies, the S&P 500, I did NASDAQ, I did the median household income, median home price. And if you start looking over 50, 20, 10 years, they're all basically growing at the same rate of M2. And so when you start assessing from that perspective, you're actually not growing in real terms. You're literally treading water. Now, there are certain assets that sometimes that will grow exponentially, but they're almost forecasting the future print. And so the S&P for the last 5 years have grown about 15%, but M2's been growing 7.4. So if you're not growing more than 7, you're actually in real terms losing purchasing power. So I spent many months just gathering data of all these investments because I wanted to know, okay, nominally it appears I'm getting wealthier, but what's really happening behind the scenes? And so if you look in chart form, price is going up, but when you look at the denominator, the monetary expansion was going up at the same rate. And very few investments are actually outpacing inflation. And that was the really scary moment for me. When you look at it in chart form, many not companies, but assets, like mainstream assets we're investing in, might be beating the hurdle rate by 1%, but you have unlimited risk. So you're like, okay, I have a 1 to 2% buffer on the monetary debasement, but risk is not, it's almost not worth the risk. And so unless you're willing to, put up some capital, but most people are not investors, they're savers. But now you are forced to be aggressive in your savings, which means now you are at risk of loss of capital. It's a really messed up system. So when people are saving in real estate and they think that's like a good investment, they're losing about 2 to 3% of purchasing power every year for the last 10 years. And those are more of the eye openings and why Bitcoin may appear very volatile. Long term, it is one of the few asset classes today that actually beat monetary expansion, but it beats it so on a long-term basis. It's beating it so bad that it's worth handling the volatility on the downside. As long as no matter what, I'm losing here if I don't do something. And that's why Bitcoin gets more attractive. Because if you sit still, you're down 8% a year.
Well, it's crazy. I read an interesting thread the other day, and it was just that the S&P 500 is largely become like a savings account, or people are viewing it as a savings account, which is just such an interesting indication how far you have to move out in the risk spectrum just to stay where you're at.
Yeah. Monetization of all assets because money is not serving its purpose. Yeah. Store value has been lost in our money.
We'll talk through like the other side of the equation. I always find it so interesting. We've been talking kind of more about these, equities, things like that. I guess for the listener who's like, well, I'm older, I'm wealthy, and I want to have a good chunk of my portfolio in fixed income. I think Bitcoiners have a pretty specific and particular view on that market, which is like what multitudes more in market cap than the equity bucket. So maybe talk through just what does that look like? Because isn't it? My understanding is it's even more dim, right?
Yeah, the 60-40 portfolio. We as a firm, in my personal opinion, is regarding bonds. I'm 35, so to me, bonds are dead. Like, there's no point of me having bonds, but I'm also have a long time risk horizon, and so for people that are not as risk averse as me because they have certain, things in their life, we're not zero bonds, but we're not zero Bitcoin. And so when it comes to the whole bond argument, it really comes down to each client and their risk tolerance. As long as they're aware, like, hey, inflation is 8, your bond of 5.5 is not hurdling that. But if you're unable to risk the tolerance, like risk tolerance of you're losing 20 to 30% of your equity, we understand that. So it's more of the educational aspect. And I can say, when people ask about Bitcoin, they're like, how much should I put in Bitcoin? I don't know that answer, but I do know it's not zero. And so that's my answer to when anyone asks what allocation percentage. I don't know, but it doesn't matter how old you are. It's not zero. And so that person that might want more heavy bonds will have a smaller Bitcoin allocation and will have maybe a smaller equity. But bonds, even though they are return-free risk, as Greg Foss said, it's not zero in everyone's portfolio, even if we hate bonds because you're bleeding purchasing power slowly. For some people, they have less time available in the market. And so as a fiduciary, we're, kind of forced to walk with them through their journey to make sure that we're not being too risk on. But the preferreds are very attractive too. And so we're kind of doing some deep research on the preferreds and what that actually means from a advisor perspective. Like, I can't just say, hey, we're going to go 100% STRC because they're going to give you a 12% return. It sounds great. And so far it's worked out perfectly and I would expect it to continue, but I can't do that in someone who's 80 years old. And there's a risk there that I am ignoring. And that's just being an equity. A company can fail. Sailor can die. I know I would hate to believe that's possible because of what they're doing, but something could change. And that's just something from our perspective, like someone that is in bonds, they understand that they are bleeding just slower than if they were doing nothing in cash. And sometimes that's okay if you have something you have to spend in 2-3 years, So
Yeah. Yeah. I think as long as they know that that's happening, then that at least is a step in the right direction versus the vast majority of folks that are just, they don't even understand the reality there. I guess, I'm sure you get this pushback. I've heard it before. CPI comes out, it's like 2.8, 2.9%. And all these Bitcoiners come out and they're like, no, that's just a lie. I know we touched on it a little bit, but it might be worth going back because, there's this whole, you're on the internet and like there's all these conspiracies and what do you believe? And a lot of the conspiracies turn out to be true for given enough time. But I guess talk the normal listener into like, how do you maybe just go over one more time? How do you back into by supporting with data the 7 to 8% and essentially, yes, the government is lying to you, I assume, right, on all the CPI stuff.
Yeah, so with inflation, we often pay attention to the price increase, but we completely ignore that prices should be going down as people get more competent, and technology is deflationary. So why is my TV getting more expensive? If we're getting more efficient on making TVs and technology is deflationary, why am I still paying more? And so when you're looking at CPI, one thing people miss is what it should have gone down. So you kind of have to add that deflationary aspect to the price increase to find a real number of actual inflation. And if you look at M2, it kind of works out pretty well. And that's kind of why I use that as my benchmark, is that is a number that I can actually look at. Well, if I can believe the numbers, I'll be frank to say here, I'm looking at a website that's published from the Fed, and those numbers could be a little off or whatnot, but that's what I have as a reference point. And so if you look at that growth, that's been growing at 6.8% for the last 100 years. And for the last 5 years, it's been 7.4%. And if you were to subtract CPI from that number, 2 to 3%, you would get a 3 to 4% buffer. And it's not crazy to say, like you can't be growing your company and more efficiency 3 to 4%. Like if you really wanted to add those two numbers, that you kind of have to count the deflationary aspect with the inflationary to get a real what prices should be going down. That's kind of what my
like
pitch would be on the price. Yeah, you have to account for why is nothing going down? Why is everything going up?
This episode is brought to you by Satoshi Pacioli, a full-service accounting and tax firm built for the Bitcoin economy. If you run a Bitcoin business, mine Bitcoin, or invest in it, you need advisors who actually understand how this industry works. Satoshi Pacioli handles bookkeeping, financial reporting, tax compliance, and strategic planning for Bitcoin-focused companies and individuals. They speak the language of Bitcoiners and help you stay compliant while building for the long term. To learn more or book a consultation, visit satoshipacioli.com. Well, I want to get both of you all to speak on this. Even in the last week, a lot of SaaS, a lot of like I saw Schwab was down 8 or 9% earlier this week, I think. And I think Jeff Booth's thesis is starting to play out that actually, things should be trending down, but we live in this upside down world, right? Of just take my firm, for example, right? We could get more efficient on the tax returns by implementing the correct technology. But we actually have to, since our costs are going up, right? On our software stack, on our payroll, we are actually having to continue to raise prices to your point earlier, right? We have to at least raise prices more than 5%, maybe even more than 7 or 8% a year, just so that we can survive, right? But all the while, our services should actually, you compare how we prepare a tax return today versus how someone did it in the mid 80s, right? Physically writing things on a piece of paper and taking it to the post office. I guess square that circle for the audience, and how does that lead to? And I want to open up to both of you all to square that circle. How does that lead to the society that I think we're seeing start to break down in multiple facets.
Yeah. So Saylor, he put out a tweet, and I put it in my article. It just, when he posted that, it just stuck with me. He said the road to serfdom is working exponentially harder for a currency growing exponentially weaker. And so when you're watching these companies grow nominally, and they're getting larger too, and they're kind of falling back in real terms. Shrinkflation is a real thing. Where you used to buy that candy bar for, when I was a kid, 29 cents. And it'd be like a full size candy bar. And today, it's $1.29 and it's half the size. And so those are the corners that you're cutting, when even though you are more efficient in making those candy bars, the price and cost of everything has gone up so much that you are cutting your quality and you have to raise prices. So you're kind of getting hit on both sides. And usually we only see the obvious one, which is the price, but you're missing the hidden changes of the quality. First, they're using different products. Like, it's not even food anymore. You read the back of almost anything and it's all seed oil or some type of chemical I cannot pronounce, where it used to be, 2 ingredients. And now you're cutting corners in the quality of your product. You're cutting the quantity of that product that you were providing, and you raise prices. And to add on that, the prices aren't going down and the quality is not getting better.
Yeah, it's insulting, right? It's a humiliation ritual. I remember I used to be a big McDonald's fiend in high school. I was like, McDouble, $1.06. I had change in my car for McDoubles. And now, it's like $3.50.
$3.29, yeah.
Yeah, exactly. And they're awful, taste horrendous.
And it's half the meat.
Yeah, if it's meat, yeah.
Yeah.
Whatever. And I think, Jeff Booth is like the best in the world, arguably, at this. His line's like, prices fall to the marginal cost of production. Yeah, I think he uses an example of coffee beans, where we can harvest coffee 80% more efficiently than we could 20, 30 years ago, whatever. And the price of coffee is still rising. It's interesting with AI, Jordan, because I think, like, conceptually that punchline, prices fall to the marginal cost of production, makes sense, but nothing, at least me personally, anecdotally, have seen that in more real time here than like playing with some of these AI tools, seeing what people have built with AI tools and larger markets. I tweeted a graph earlier this week. You and I, Jordan, went back and forth a little bit on X, where the price of Bitcoin is largely tracked software. So it's like the market's perception of Bitcoin is just essentially the same perception it has of a CRM, which I think is insulting as a Bitcoiner, because it's so much more than that. But it can't be replicated in the same way that software can. And so there's just like this total misconception, mispricing of everything. Even silver and gold, precious metals that should be fairly stable, are having these crazy kind of volatile move, or multiple standard deviation moves outside of their normal trading ranges. And so it just seems to me that like something's coming to a head here. I think maybe a little faster than we all kind of anticipated. And I'm particularly kind of worried about and maybe too strong language, but for sake of conversation, worried about like the strength of U.S. economy, just because largely since 2010, most of our GDP or stock market growth has been software companies. Just blindly invest in software, number go up. And I think that's really coming to a reckoning.
Dude, I was at this Market Outlook, I work out of this wealth management firm, right? And I went to their Market Outlook event like 2 weeks ago. Now, I want to get your all's thoughts on this too. So it was so bullish. The whole thing was like, markets are going to, they're going to rip this year. Everything's going up. And I was just sitting back kind of having the thought that you're having, Wyatt, of like, man, I don't know. Like, I talk to real people all the time. And I don't know. And I might get in trouble for saying this, but it almost felt to me like, man, are these like outsourced salespeople for keep your money in the market, even when times get tough? And I get that. Like, I understand you have to keep your money in the market, But if everyone is feeling this, like, what's going on? They're reading that article I'm sure you guys saw that went viral on Twitter yesterday about how AI is accelerating to a point where, you walk into a restaurant today. I don't know if you guys feel this. Like, I walk into a restaurant or any like public place, like a Walmart or something. I'm like, no one knows. Like, no one understands. They're not using Claude. They're not like in the terminal. They're not building like little apps to make them be more efficient. And that guy laid that article out like so well to be like, oh, I've been polite. People are, and he's a software person who's in AI. So, dinner parties, people are like, oh, is this thing crazy or whatever? He's like, oh, whatever. It's like, we'll see, kind of being polite, right? And then that article, he's like, no, it's okay. I can't hold back anymore. Like, people have to understand. And yeah, Bitcoin's so well positioned for a world like that where prices do have to fall, and you do have to, and especially if we see agents. I saw AlbiHub talking about how they had a Lightning product that was built entirely by agents. They're trading with each other in Lightning. I'm like,
orange pilling other agents.
Yeah, but like the normal person, man, it's hard. It's moving so quickly. Even I'm overwhelmed at times, and I feel like there's some nights I don't go to sleep till too late to say on the podcast, and like because I'm just so enamored with all this stuff. And then there's this permanent underclass meme, right? Where I think there's some of the people who are seeing, like, reading all these things on Twitter, and they're kind of just lurking, but they don't know. They're kind of like frozen. They don't know what to do with it all, and they're scared. Anyways, I don't know where we go with that. I know we could go for a long time, but I just want to throw all that out there. Get your
read
thoughts.
that article last night, and when I was reading it, that's one of the first articles I've read in a while that I really had to sit down and think through. And first reaction is it sounded like a Bitcoiner. It's like, hey, he's right. It's when. And so, because Bitcoiners were known for saying, hey, it's going to the moon tomorrow. You should have put all your money into Bitcoin. And then it dropped 60%. And you're like, well, it's going to happen. I know it is. With this AI thing going down, most people are not acknowledging that as technology advances, prices should go down, to Jeff Booth's point. And so the way I view Bitcoin is it is the first thing in the history of the world that is 100% demand driven, because we already know the supply is 21 million. You cannot increase the supply if the price goes up. And so with AI, they are going to completely compete against each other in the most advanced tech, to where they're going to be driving that price down. And what are they going to put their money? They're not going to put their money in anything that's inflationary, because they themselves are deflationary. And so my long-term thesis...
The price down of services and products, right?
Services and products, is they get better producing those goods, and being AI, they're going to be extremely advanced as they grow and code each other and make costs go down. They're not going to put their money that's inflationary, because their prices are going to go down, their profits are going to go down, and now they're basically combating inflation in a deflationary world. And so my long-term thesis is AI, AGI, whatever, they're going to be storing their time in a deflationary asset that is not supply driven, because you'll just increase the supply exponentially in any other asset or good, and then the price will go down. But you can't do that in Bitcoin. And so it kind of perfectly aligns AI and Bitcoin. You can see that they are aligning perfectly. You have something that will basically drive, progress up, but prices are, I do not think, going up. I think we're just going to be more productive, and prices will be going down in a AI world. And then people are going to be in trouble when we hit deflation, because of the debt they can't service or the income. And so I think we're heading into a deflationary production with AI, even though prices may, in dollar terms are going up. But if they're not using dollars anymore, it'd just be like using Venezuelan to the dollar today. Like those dollars are going up far more than our dollar. And I think Bitcoin is going to kind of be the measuring stick of how society's, moving on with AI. So I kind of rambled a little bit, but you can get my point.
That's good. Yeah, no. Okay, so I gotta get back to mining fiat in like 3 minutes. And so
Okay.
Jonathan, I want you to give us I gotta have you give us the hopeful Bitcoiner outlook to end here,
Yeah.
because we always, we end on a positive note. I know people are like, what's going on? Give us your, I don't know, maybe go out 3 years, how many ever you want to go out and describe the future that Bitcoin can afford us.
Yeah, so I think for us individually and businesses, if we start to analyze the world we're in and start to measure based on a more stable unit, there's like true growth and progress happening. And maybe the world today has not caught on because the price may be down, but if you're acquiring more hard money or hard assets that are not printable long term, those have proven to outpace monetary expansion. And I just think it's important to know, like in a world where there's persistent monetary debasement, um, how we're measuring our progress matters as much as what we're measuring. And so if you're measuring your progress in a more stable unit like Bitcoin, then I think long term you will be better off in real terms. That's kind of my pitch, and I just think more people should study, what money is, why storing money in something that someone can print is not a good long-term solution when you can store your wealth into a network that you cannot print and kind of have freedom and the ability to keep your wealth from being diluted.
Yeah, it's beautifully said. I would just, end too. It's like you can't be, idle. It's like you got to be taking action. You got to be integrating Bitcoin into your practice. You got to be integrating AI into your practice. Like these are two trends. Like I don't think you want to bet being on the wrong side of. And then last thing I'll say is new rule of BFFS. Like you can't go to bed until you hit your rate limit. So good job.
Yeah, no, I'm that's good. I'm gonna have to either bring my Claude plan down, because I've hit my rate limit a few times, and it's like, all right, just give Anthropic more money, I guess. Yeah, but okay, we got to end here. But Jonathan, tell people where they can find the article. Tell people where they can get their wealth managed, their taxes prepped, how to find you on all the different platforms.
Yeah. So our website's orangehorizonwealth.com. You can find me on Twitter, Camps Jonathan. My article is posted on my Twitter, or you can look it up on Medium. Financial measurement. It's called the Illusion of Growth: Financial Measurement in an Era of Monetary Expansion.
Yeah, and we'll link it in the show notes. And it's Camps with a K, just so everyone knows.
Camps with a K.
If you're just listening. So, well, thank you, sir, for coming on. This is fun.
Thanks, Jonathan.
Man, we could have gone probably for
honor.
a long time.
Yeah, thank you guys. Fan of what you guys are doing.
Appreciate it, man. All right, we'll talk to you soon.
See ya.
All right, thanks, y'all.
We appreciate you joining us. If you want to help build the future of Bitcoin financial services, hit subscribe, leave a review, sign up for a newsletter, and share this with someone in your network who's integrating Bitcoin into their practice. The more professionals we reach, the better this ecosystem serve and our clients benefit. Stay sharp, stay sovereign, keep leading from the front.